Okay guys, Saturday the 3rd of February, so let's have a look at the US indexes. Now I'm doing it a little bit different this week because I'm not in Edinburgh, so I'm not on my PC. Recording the videos on my laptop, which means basically I'm not in the videos, might be a little bit less good quality on the recording also. Okay, so starting on the S&P 500, what were we looking at last week? We were continuing to look at this strong upward trend. We're using the trend line as our basis for the continuation of the bullish trend. We went over how if we started to break through this level, we'd then start to look for the correction. Now the correction levels, we had one sitting right here, like this. And what we can see is the market came down and tested that level on the Thursday. And then basically what I went over with subscribers, let me mark this in, one here and one here. What I went over with subscribers was if we started to break down below this level yesterday, we were just holding below it as we came into the US Open, we could look to sell the market if we pressed higher, because potentially what we're seeing is a break of this strong level of what was resistance becoming support. That was giving us a negative sign. We would then expect the market to come down toward at least the 780 level, but really we were looking at the 770 to 760 areas. Now we've had a very, very strong move down on the S&P 500, as we've been going over in these videos also, because it has been such a strong upward trend on such a steep trend line. When the break came, it was likely we were going to see some sort of a violent correction. Now, coming into next week, what are we looking at? This area up here remains key support and resistance. Really 2812 down to really the 2800, so the round number 2800. If we see the market pressing up toward that level, we can look for potential resistance. Now really it's only if we start breaking up above there, the market is starting to look a little bit more bullish once again. I'd then be happy to look for potential pullbacks and continuation, certainly back up toward these previous highs at 2830 toward 2840 right here. Now down below we have a few different levels of support, but really the very key levels don't start until we get all the way back down toward 2700 down into 2685 right here. There is the potential that in the medium term, it doesn't mean it's going to happen in one day. In the medium term, there is the possibility now this market is going to come down and test at these levels at a minimum. This structure on the way up has been a very, very little pause, a very, very little test, and very, very little appearance of the bears basically. So now that we are correcting, there is the strong possibility that we're going to come all the way back down to this 2700 level. If we do come down there, it's really when I'd start to be interested in looking for buys once again. Now, where we are sitting at present, we do have this level right here, 2760, down toward 2740, around about 45. And we've got another level down below there, around about 2740, down toward 2730. One right here, and one right here. Up above, once again, I'm testing back at these previous lows, around about 2770, all the way up to 2780. So the way I'm looking at it is, with these levels, for me at least, they're relatively minor, 1, 2, and 3. There is the possibility that we will see bullish bounces off of these areas, but after such a strong move down, certainly on the Friday, we've came off, 73 points, which is a lot for the S&P 500. Certainly coming into the start of the week, I want to be a little bit careful. The preference is selling on breaks of these levels. Really, each break of each level, selling, looking for the move down to the next one, into the next one. If we start breaking here, then I would expect the market to start coming down to that target at the 2700 levels. If we do see the bounces coming into the market, I'm then happy to look for the weakness and selling further up at this level to really 2800 and higher. It's only if we start breaking up above there, I'd then be happy to look for the pullbacks and the bounces higher. Now, one of the ways I looked at this was you can see the strong upward trend. We then had the flat top, basically this as an ascending triangle. We then broken out, we came back down, we're testing at what was the resistance of the ascending triangle. When we started to break below that, then gives us a fairly bearish sign, and you can see the result. Okay guys, so that's pretty much everything for the S&P coming into next week. As I've mentioned, after such a strong downward move now, the preference really at these levels, which for me are a little bit more minor, certainly at the start of the week, I would rather sell unless we start to get clear evidence that we are holding at these levels. Apart from that, selling, it's really when we start getting back down toward these levels now that I'm happy to look for buy positions, unless we start to break up above this area, which is basically at that level of the ascending triangle once again. Okay guys, let's do the exact same thing for the NASDAQ. So what we can see is another very strong move down on the Friday. And what we were looking at for last week was how, whilst holding up above this level of sloping support, we could continue looking for the buy positions on this market. We can still continue looking at the market as bullish. So we popped up a few times, and then basically the only thing I added with subscribers was coming into I believe Thursday and then certainly Friday. What we're looking at was the potential for this test up here, this test here, and this test here to be forming into a head and shoulders pattern. Now, coming into the open of the US markets, this was just sitting down below this sloping support line. Usually I like to see some sort of confirmation, but what we went over was how with this potentially being the head and shoulders pattern, with it sitting down below, if we've seen pullbacks, we could sell into the market, looking for the move down, at least into this area, we're about 2840, down into 2815, right here. And the market has came all the way down, it's crashed straight through that level, and it's closed all the way down at 2745. So a very strong move down on this market also. Now, coming into next week, again, with this market similar to the S&P, a little bit more bearish now. Very, very strong move down. I just want to be a little bit careful coming into the start of the week until we get a little bit more evidence. If the market is going to just rocket back up once again, I'd need to see some sort of evidence of at least the market holding before turning back to preferring buy positions. Really, I'm expecting at least a test of this lower band of sloping support. When we created the channel a good few weeks back, I think it was actually before Christmas, you can see the tests, if we come all the way back, multiple tests on this market, testing back in September, testing back in October. I would expect now for this market to come down and at least test at these levels. So up above, key resistance 2840 to 2815. More than happy to sell at this level if we come back up toward it. Also, if we start to break back up above, I'd then be happy to look for bullish continuation. This level 2790 to 6770. I've just done the S&P, so I'm saying 2 instead of 6. Down below there, we have another level at around about 6740. Down into 6720. For me, again, this is a little bit more minor, but certainly if we're lining up with the sloping support line, I'm happy to watch for the market to start holding here for potential bullish positions. Down below there, we're really at 2700, down toward 6680. Really, I'm expecting the market to test this level at a minimum after such a strong downward move and a break down below this sloping support. So 6700 to 6680, really for me, this is the first main area I'd start to watch for buy positions. Apart from that, anything that we see, I'm more than happy to sell into the market on any pullbacks, looking for a move down toward this area. Now, if we start breaking down below, really this area, now we have the spike down here that we want to be a little bit careful of also. However, for me, this is the main support area at 6660 to 6640. If we start failing at this level, really it would also be a sign that we're failing at this sloping support level if we start to come down to test here. And you can see, Monday would be over here. If we start failing here, it's likely we're going to see a much stronger correction all the way back down toward 6,530. So, just a quick recap. Coming into next week, I'm happy to sell into any rallies on this market. So only if we start breaking back up above this level at 6,840 really, that I'd be happy to look for the bullish continuation. A little bit bigger. Now we have a support level here, 6,700. This is really when I'd start to be happy to look for potential buy positions once again. This one down here, 6,660 to 6,640 is the main level of support. Or the last level of support, excuse me. If this starts to fail, then I am expecting the market to come down with a much stronger correction towards 6,530. So we've got the clue with the potential head and shoulders here. The main clue was as we started to break through this sloping support line, and you can see it's what we've been going over for quite some time. You know, after we broke up above, we're looking for the break back down below before we could look for the stronger correction. Came in last week. I didn't expect it to come off this much. But you can see, if you have picked out key levels in the market, 200 points the market came off, you can see the potential reactions that the market has when those levels start to fail. Okay guys, so as always, I hope that was helpful. I hope you all have a great trading week next week. I'm James Orr, and thank you.